One of my students, she's Taiwanese, she's 23 years old, and she's trying so hard to use her hard-earned savings to make money. She watched a lot of people on social media making thousands of dollars per day, and she's chasing after those exact same gains. And today she asked me, what am I doing wrong? And she pulls up a chart and shows on that chart her ETF pick that she's been trying to trade. She was getting very technical, talking about the 520 SMA, how she was targeting this price level. She sold out too early. She feels regret that she didn't make as much money as she could have made. I told her, look, you're doing everything the hard way. Just take your money, just put it into a good index fund and just leave it there. Don't touch it. You will be making way more money than every other day trader out there because most of those day traders, they'll get torched. They'll lose everything. Sure, they might make 3,000, 5,000 when there's a bull market and everything's going up and it's really not that hard to make money. The problem is the longer you gamble, the more likely you'll blow up your account. And that is the life of a day trader in most cases. I heard that 90% of day traders will fail. You're 23 years old, and all you really need to do is just put money into index funds and just leave it there and just let time compound that money into generational wealth. The stock market is the best way to build up generational wealth. She thought about it, and I could tell that she wanted to press on how she could be better at day trading and reading charts and doing technical analysis. And I said, that's a very good skill to have. Like in my case, I keep 20% of my money sidelined, and that money is to do options trading so I can generate cash flow income, take that money that I make every week and put it into my investment fund, the 80%, and just buy good index funds and let that compound. I think in that short period of time, she got the best advice that anyone could have given her. I wish when I was her age, someone had given me that straight up no nonsense advice. Stop wasting your time, pump money as much as possible, automate your deposits into your long-term investment accounts. Just pick any of the good index funds, the S&P 500, the NASDAQ 100. Just leave it in there. You don't have to do anything. You don't have to lift a finger. The magic of compounding will do all the heavy lifting. But of course, as humans, we want instant gratification. We're not patient. We don't want to wait. Waiting is the hardest part of investing because we want things now. We want to see results right away. Emily is Taiwanese. She's from Taiwan. She has all her savings in Taiwan. And she wanted to know what's a good index to invest in. I told her Taiwan, just like my other Korean students in Korea, these two countries are very small. And yes, the market's been going up. But if you compare the index fund growth, Taiwan with Korea and with the US, those two countries don't even come close to the magnitude of growth that we've seen with the NASDAQ 100 in the US. And let me show you the charts. And this will be mind-blowing. And she realized that she's been putting all her efforts and time wasted on a smaller market. Why go small when you go much bigger and better that grow much faster if you tap into the US market? Let me show you the comparison. Here's the Taiwanese index fund. It's TWSE, small cap. And if we take a look at the monthly, so we have the M here, and from 2016, it looks like it only goes back to 2016. If we take a look at the growth, it's been pretty good growth, right? From here to the peak back in July 24th. Let's take a look at how much it's grown from 2016 to the current price today. And that's about 132%. That's the Taiwanese market. Let's look at my other students in Korea, Korea is Kospi. This is their composite index here. And let's take the same time frame from 2016 and see what the growth rate has been up until today. So we're looking at a lower percentage increase at 114%. So you would have easily doubled your money, a little bit over that in both markets. Let's take a look at the US market. We're going to look at NASDAQ Composite Index. So we'll take it at the bottom here. Before I do this, do you want to guess what the gain was since 2016? Let's take a look. 445%. She's like, why am I putting all my money into a lesser market with lesser returns? And I said, exactly. 445% compared to Taiwanese market at 132 and 114 with the Korean market. Listen, guys, it doesn't even compare. And 23 years old, and you get this kind of compounding, this kind of growth, and you leave that money and just let it grow. You don't need to chase after all of these daily gains sitting in front of your computer, killing yourself, being stressed out, losing sleep. And I see this all over social media, and it just burns. It just eats me up because when I see it, it may be true, but a lot of those people who post it, then they lose it and they'll disappear from social media, and then they'll save up some more money and they'll try again. They'll make quick gains. They'll advertise how awesome they are just because it's a bull market. Everything's going up. You can't really lose. But when the market goes down, they lose everything. And this is poison. I believe it's poison for the younger generation because it's teaching them that patience doesn't pay off. You need to make quick gains now. Fire. You need to gamble. You need to buy things that people are telling you to buy. Here are the signals. Just do what I do. Just copy my trade. They have no idea whether it's a good company or a bad company, and they're just doing blind trading. They're just guessing, just not knowing what they're doing, but just hoping for fast gains. The point is, keeping it simple is the best. Earn money, automate deposits into your long-term investing account, invest in US index funds, and just let it sit there and grow and compound. Over 2016 to 2026, that's 10 years, you can see a 445% return. Just in that 10 years. Imagine 20 years. Imagine 30 years. Now, what I will say about learning how to trade, that is invaluable skill. And the reason why is because you don't have to just blindly just dollar cost average down, which is fine. It does depend on your time horizon. So someone who's in their 50s has a different time horizon than someone who's in their 20s. If you learn simple tricks on a chart, how to find better, safer buy prices to get into your stocks or crypto, that will go a long way. You can stay a little bit patient. You can buy a little bit today, and as it goes down, you have price levels that are below at a discount, and you can position size. You can buy more shares as the price is going down and further down. So you're still averaging down, but at increasingly bigger amounts at lower prices. And so your average cost is going to be lower than if you just blindly guess and just put all of your savings into whatever the price is today. That's it for today. Before we finish, I'd like to know, please leave in the comments below whether you agree with me or disagree with me and why. I'd love to continue and further this discussion. Until then, please check out my upcoming videos, and I'll see you next time.